Every president claims they'll serve the people, protect the Constitution, and put country before personal gain. But what happens when the highest office in the land becomes the world's most profitable business venture? When the Oval Office transforms into a sales floor, and when presidential power gets auctioned off to the highest bidder across multiple continents and industries ranging from real estate to cryptocurrency to commemorative sneakers. This is the story of how Donald Trump and his family turned 2 presidential terms into what might be the most lucrative political monetization scheme in modern history, generating an estimated $3.4 billion through a dizzying array of businesses, deals, and ventures that all share one common thread. They wouldn't exist, or wouldn't be nearly as profitable, without his status as President of the United States. And what makes this even more remarkable is that much of this enrichment happened while he was simultaneously fighting off $500 million in legal judgments, facing criminal indictments, and dealing with mounting debt obligations that would have crushed most business empires. But here's what nobody's talking about: the sheer scale of this operation, the brazenness of mixing presidential duties with personal profit, the way foreign governments and corporations lined up to funnel money into Trump family ventures, and most puzzling of all, why so much of the American public seems to have shrugged at what would have been considered scandalous corruption just a generation ago. So let's break down exactly how the Trump family built this empire, where the money came from, who paid it, what they might be getting in return, and whether any of this matters anymore in American politics. The most obvious place to start this financial investigation is Mar-A-Lago, because Trump became the first president in American history to sell direct access to himself and his inner circle for personal profit, not through some backdoor arrangement or hidden scheme, but openly and proudly through a private club that wealthy individuals could join if they paid the right price, and what they got for that money was something unprecedented: the chance to mingle with the sitting President of the United States, his family, his advisors, and potentially influence policy decisions over cocktails and golf rounds. Before Trump first won the election back in 2016, the initiation fee to join Mar-A-Lago stood at a relatively modest $100,000, which was expensive but not extraordinarily so compared to other exclusive clubs in Palm Beach and similar wealthy enclaves around the country. But by last fall, after Trump had served one term and was heading back into the White House for a second, that initiation fee had been poised to increase to $1 million, a tenfold increase that had nothing to do with improvements to the facilities or the quality of the food and everything to do with the value of presidential proximity. When you do the math based on the revenue Trump disclosed on his personal financial disclosure forms, which presidents are required to file annually, and factor in the cost increases over time, along with the number of new members who joined during and after his first presidency, you arrive at a conservative estimate that Trump made approximately $125 million in extra profits at Mar-A-Lago, specifically because of his presidencies. Money that wouldn't have flowed into his personal accounts if he'd remained a private citizen and real estate developer, instead of becoming the most powerful political figure in the world. What made Mar-A-Lago particularly problematic from an ethics standpoint wasn't just that Trump was making money from the club, since technically he owned it before becoming president, but rather that he was actively using his presidential platform to promote it, hosting foreign dignitaries there, conducting sensitive national security meetings on the patio where paying members could watch and listen, and essentially turning a private business into an extension of the White House where access depended on your ability to write a check rather than your official government position or democratic legitimacy. After examining the Mar-A-Lago windfall, the next major source of Trump family enrichment came from what most people would consider campaign fundraising, which normally operates under strict legal boundaries that prevent candidates from using donated money for personal purposes. But Trump discovered numerous creative ways to blur those lines and redirect campaign cash into his own pockets and those of his family members through a combination of merchandise sales, legal fee payments, and the strategic use of political action committees. For one thing, Trump quite conspicuously sells what appears to be campaign merchandise through his personal online store rather than through official campaign channels, which means that when his supporters buy items thinking they're upholding the MAGA movement and its political causes, the money actually flows directly to the Trump organization, and ultimately into Donald Trump's personal accounts instead of funding campaign operations or Republican Party activities. We're talking about an extensive catalog of products ranging from a Gulf of America baseball hat priced at $50 to a pair of Trump beer koozies for $18 to Trump-branded flip-flops selling for $40, and in the last year, Trump has actually branched out from selling standard merchandise to special limited edition product lines that generated truly staggering revenues, including $2.8 million from Trump watches, $2.5 million from Trump sneakers and fragrances, $3 million from an illustrated book called Save America, and $1.3 million from the God Bless the USA Bible, also known as the Trump Bible, bringing the total merchandise income to approximately $27.7 million. In some ways, this merchandise operation resembles a fashion designer setting up a folding table in front of their own department store to sell knockoff versions of their own products, directly competing with their official brand while technically owning both enterprises, except in this case the designer is the President of the United States, and the customers are political supporters who may not fully understand where their money is actually going or how it's being used. But the merchandise sales represent only one stream of campaign-related enrichment, because Trump also discovered another lucrative loophole involving legal fees. And while a traditional political campaign fund for a candidate cannot legally spend donated money on personal legal expenses, Trump figured out that if he converted his campaign fund into a political action committee, which operates under slightly different rules, it suddenly became permissible to use that money to pay for his mounting legal bills. Through this mechanism, Trump has successfully used his political action committee to cover more than $100 million in personal legal fees related to the various criminal indictments, civil lawsuits, and defamation cases he's faced over the past several years, effectively making his political supporters pay for his legal defense against charges ranging from business fraud to election interference to sexual assault allegations. And when you add up all the enrichment through campaign-related activities, combining both the merchandise sales and the legal fee coverage, you arrive at a total of approximately $127.7 million that Trump has essentially extracted from his political movement for personal benefit. Moving beyond real estate and Middle East deals, Trump has pioneered an entirely new category of presidential enrichment that could be called the corporate squeeze. Because in the past, presidential nominees and sitting presidents simply never filed lawsuits against media companies, since it seemed like an inherently unfair use of power to weaponize the legal system against journalistic organizations that were fulfilling their democratic watchdog function. But Trump, who actually has a terrible track record of losing defamation and media lawsuits throughout his business career, suddenly started winning massive settlements from major corporations once he became president again. Throughout his career before entering politics, Trump filed approximately a dozen lawsuits against media companies of various kinds, and virtually all of them were either dismissed by judges or voluntarily withdrawn before trial because his legal claims were so weak. But remarkably, his record completely changed once he regained the presidency, and over the past several months he's extracted enormous settlement payments including $15 million from ABC News, $22 million from Meta, which is the parent company that owns Facebook and Instagram, $10 million from X, which is the social media platform formerly known as Twitter, and $16 million from CBS News, which is a unit of Paramount Global. On top of those media settlements, Trump and his wife Melania have also managed to sell to Amazon.com the exclusive rights to make a biographical movie about her life with Amazon agreeing to pay $40 million to produce this film, of which Melania's personal cut works out to approximately $28 million that she can use to support their post-presidential lifestyle of private jets and luxury properties around the world. So, when you add up all of these payments from various corporations, combining both the media lawsuit settlements and the movie deal with Amazon, it comes to another $91 million that has flowed into Trump family accounts specifically because of his position as president. Since none of these companies would have agreed to such generous settlements or payments if they weren't concerned about potential regulatory retaliation, loss of government contracts, or other negative consequences that might result from angering a sitting president. Perhaps the most remarkable evolution in Trump's business empire has been his sudden embrace of cryptocurrency, which is particularly ironic since just a few years ago he was openly skeptical of digital currencies, calling them potentially dangerous and unstable. But once he recognized the profit potential, Trump dove headfirst into the crypto world through multiple ventures that have generated absolutely staggering returns. Truth Social, Trump's social media platform, arguably would not exist without his tenure in the White House since it was created specifically as a response to his being banned from mainstream platforms like Twitter and Facebook, and he continues to use presidential statements made exclusively on Truth Social to draw users to the platform, with its entire user base consisting primarily of MAGA supporters who follow him there, so this definitely belongs in the category of presidential profits. But the question is, how much is it actually worth? The challenge with valuing Truth Social is that the parent company, Trump Media and Technology Group, lost more than $400 million last year despite having relatively few users and minimal advertising revenue. And many institutional investors consider it what's known as a meme stock, meaning its share price goes up and down based primarily on emotional sentiment about Trump rather than any rational analysis of the company's business fundamentals or profit potential. After consulting with an eminent forensic accountant to try to establish a reasonable valuation range, the expert suggested that Truth Social is probably worth somewhere between $4 and $20 million to Trump personally, and being generous, he recommended adding another $5 million to account for potential future growth. So we'll conservatively estimate $25 million in personal profit from the Truth Social venture. But Truth Social represents only a small fraction of Trump's crypto empire, because his family has also launched something called World Liberty Financial, which was announced last fall during the presidential campaign when Trump took time out from campaigning to participate in a rambling 2-hour live stream, promoting this new venture that involves his sons and Zach Witkoff, who is the son of Trump's diplomatic envoy, Steve Witkoff. The first product that World Liberty Financial sold was a special crypto token that would supposedly entitle owners to vote on the company's future business plans and strategic decisions, and the company disclosed that entities related to the Trump family would receive approximately 75% of all proceeds from these token sales, which generated roughly $550 million by around the time of Trump's inauguration, meaning the Trump family's cut came to an astonishing $412.5 million from selling these governance tokens. Another way the Trump family has monetized crypto through World Liberty Financial involves yet another connection back to the Persian Gulf, because Zach Witkoff announced at a conference in Dubai that a company owned by the royal family of the United Arab Emirates was going to purchase $2 billion worth of what's known as stablecoin from World Liberty Financial. And stablecoin is a special type of cryptocurrency that's designed to maintain a stable value equivalent to the US dollar. The way stablecoin works creates a fascinating profit opportunity, because when customers buy stablecoin, they give you real dollars, which the company then holds in reserve and can invest to earn interest while the stablecoin remains outstanding. And with current Treasury yields exceeding 4%, A $2 billion investment can generate more than $80 million per year in interest income just from holding customer deposits. Importantly, the Emirati entity bought that stablecoin specifically to use it for investing in Binance, which is one of the world's largest cryptocurrency exchanges, and Binance controls when that stablecoin gets redeemed and converted back into dollars, and I'm going to assume that Binance is not going to redeem that stablecoin while Trump remains in the White House, meaning World Liberty Financial will continue earning interest on those deposits for at least 4 years. Calculating conservatively. By the time Trump leaves the White House for the second time, World Liberty Financial will have made more than $280 million in interest income from the deposits backing that Emirati stablecoin purchase, and the Trump family's 75% cut of that interest income works out to approximately $168 million in pure profit. After that initial stablecoin deal was announced, another Emirati entity called Aqua One, which is a somewhat shadowy foundation that nobody seems to know much about, also announced that it would spend $100 million buying World Liberty Governance tokens, of which 75% flows directly to the Trump family. So, when you add up all the crypto money that the Trump family has made specifically from United Arab Emirates sources, combining the stablecoin interest and the governance token purchases, you arrive at approximately $243 million. Beyond World Liberty Financial, the Trump family has also gotten involved in Bitcoin mining through a venture that started as a partnership between the Trump brothers and a small securities firm called Dominari, and they set up a joint venture that was initially going to invest in data centers for cryptocurrency mining, with ownership split 1/3 to Dominari and 2/3 to the Trump family. About a month after they announced this arrangement, a Bitcoin mining company called Hut 8 contributed $100 million worth of mining equipment to the joint venture in exchange for an 80% ownership stake in the new combined entity, which means that the Trump brothers, who previously had 2/3 of the original joint venture, now have approximately 13% of the much larger company, representing an ownership interest equivalent to about $13 million in Bitcoin mining machinery and operations. In the last few months, Trump Media and Technology Group, which is the parent company that owns Truth Social, has done something completely different and totally unrelated to social media, by deciding to go into the cryptocurrency business primarily by capitalizing on the irrationally high price of its shares, which trade at inflated valuations simply because of their association with Trump, to sell stock and raise cash that the company then uses to buy Bitcoin. The company has exploited the meme stock phenomenon to raise approximately $760 million in cash, which it has used to purchase roughly $2.3 or $2.4 billion worth of Bitcoin. And since Trump holds about a 42% ownership stake in Trump Media and Technology Group, he effectively has a 42% interest in this pile of cryptocurrency and cash, because the company could feasibly just sell all the Bitcoin and distribute the proceeds to shareholders as a special dividend. If they did exactly that, Trump's share would amount to approximately $1.3 billion, making this by far the single largest source of Trump family wealth creation during his second presidency. And it all depends entirely on the continued public belief that anything associated with Trump has special value worth paying premium prices for, regardless of underlying business fundamentals. The Trump family's final and perhaps most audacious crypto venture is what they call the Trump meme coin, which represents the purest possible distillation of exploiting the presidency for personal profit, because 8 years after the Trump family first promised they would never do anything even perceived as taking advantage of the presidency, this new venture doesn't even pretend to be a legitimate business or investment opportunity. A meme coin is a form of cryptocurrency that doesn't even claim to have any practical use or underlying value. It's just sold as a novelty, a gimmick, a kind of online joke, and in this case, the joke is that people will pay money to Donald Trump simply because he's Donald Trump and they want to own something associated with him, no matter how worthless it might be. After introducing the meme coin shortly before his inauguration, Trump came forward again in April and announced that he would host a private dinner at the White House for the top 220 holders of his meme coin, essentially re-incentivizing people to go out and buy as much of this worthless token as possible in hopes of getting an invitation to dine with the president. And by that time, we estimate that the revenue Trump had brought in through sales of his meme coin, various trading fees, and another separate meme coin sold by his wife Melania, had reached at least $385 million. When you add up all these various revenue streams, trying to be as conservative and fair as possible by using present value calculations so we're not counting money that won't be earned for decades as if it's equivalent to cash in hand today, and establishing reasonable baselines for each estimate while acknowledging that the actual totals will probably be significantly higher, you arrive at a grand total of approximately $3.4 billion that the Trump family has made or stands to make specifically because of Donald Trump's presidency. That $3.4 billion breaks down across multiple categories including $125 million from Mar-A-Lago membership fees, $127.7 million from campaign merchandise and legal fees, $105.8 million from Middle East real estate deals, $40 million from the Vietnam Golf Resort, $91 million from corporate settlements and Melania's movie deal, and more than $2.5 billion from various cryptocurrency ventures ranging from Truth Social to World Liberty Financial to Bitcoin mining to meme coins. What stands out most strikingly after tallying up all this money is the almost desperate eagerness, as though the Trump family really isn't missing any opportunity to extract as much wealth as they possibly can from his position as president, selling everything from $100 sneakers to billion-dollar cryptocurrency tokens, licensing his name to golf courses in Oman, accepting private jets from Qatar, hosting paid dinners for meme coin holders, and essentially treating the American presidency as the world's most valuable brand to be monetized through every possible channel. But here's what troubles me most after conducting this exhaustive financial investigation. I've tried to give the president the benefit of the doubt at every turn, using conservative estimates, excluding questionable items where the presidential connection seemed weak, and accounting for the time value of money. So we're not unfairly inflating future earnings, which means that in all likelihood Trump is actually going to earn substantially more than $3.4 billion by the time his second term ends, and possibly even more in the years after he leaves office as these various deals and investments continue generating returns. And I found myself asking, why does this matter? Because a lot of this financial activity is publicly disclosed. Trump doesn't make any secret of his money-making ventures, and in some ways the people he's squeezing the most aggressively are actually his own supporters who are buying his merchandise, investing in his meme coins, and funding his legal fees through political donations. But they seem perfectly happy to hand over their money regardless of how transparently transactional the relationship has become. What made me wonder even more as I compiled these numbers is what are all these people and foreign governments and corporations getting in return for the money they're paying to the Trump family? Because if Trump wants their money this badly, pursuing every possible revenue stream, no matter how small or how ethically questionable, then presumably these investors and donors and deal partners are getting something valuable in exchange, and that's ultimately the question that matters most. Are Middle Eastern governments getting favorable American foreign policy in exchange for their billions in investments with Jared Kushner and real estate deals with Trump? Are corporations getting regulatory favors or avoiding antitrust enforcement in exchange for settling lawsuits and buying movie rights? Are cryptocurrency companies getting favorable regulation and government endorsement in exchange for business partnerships? And are Mar-A-Lago members and executive branch club members getting policy influence or government contracts in exchange for their membership fees? Because if the answer to any of these questions is yes, then we're not just talking about presidential enrichment. We're talking about a systematic corruption of American democracy where government policy is for sale to the highest bidder. The thing that should concern every American regardless of political party is not necessarily that Trump is making money, since technically much of what he's doing is legal, even if it's ethically dubious. But rather, what this transactional approach to the presidency means for the country, when the person holding the most powerful position in the world is simultaneously running what amounts to a global business empire that creates countless opportunities for conflicts of interest between his personal financial gain and the national interest. We've crossed a line that previous presidents, both Democrats and Republicans, were careful not to cross. And now that the line has been crossed and the public seems largely unbothered by it, the question becomes whether we can ever go back to a model where presidents put their business interests in blind trusts, avoid even the appearance of profiting from their office, and make decisions based solely on what's best for the country rather than what's best for their bank accounts and those of their family members. This is the experiment we're living through right now, watching in real time as one family transforms the American presidency into a $3.4 billion business empire. And the outcome of this experiment will determine not just whether Trump gets richer, which seems inevitable at this point, but whether future presidents will follow his model and turn public service into just another profit center, and whether American democracy can survive when the highest office in the land is treated as the ultimate entrepreneurial opportunity rather than a sacred public trust.